Namaste. We are going to talk and explain the weekly newsletter, and we will understand the five parameters of RVCC. So the first parameter is about the PE ratio. We share the last week and the current week datas. Now, price earning ratio is like the how expensive the market is. Okay, the lower the price earning ratio, the better it is. For Indian markets now, currently, if it is around 18 or maybe 19, it is good. It's not only about P ratio, even if it is high and the trends are up, then also it is good. But yes, anything below 20, anything around 18 or maybe below 19 is a very, very cheap level. And with all this fall, we have seen that the market Ps have actually come down from 22, 23 to around 20 right now. The second parameter is the MG ratio, which is the market capitalization to GDP ratio. This is something, if we consider that this is a level of 100, and at a level of 100, if the market is over here, which is above 100, okay, then it can be understood that the market is expensive. And if the market is below the normal GDP ratio, which is the gross domestic product of our country, then we can consider that the market is cheap. So currently, if this is 100, we are somewhere here around 95. So if it is further low, it becomes cheaper. And if it is further low, it is becoming cheaper. So that has to be understood. RSI is the relative strength index. So in a normal scenario, there are two levels. One is 70 and the other is 30. So 30 is a position when when it is a good buy time, and the 70 is yes a level wherein it is a good sell time. 70 is a level when like the market is absolutely overbought and people have all purchased, and I think that's the time when one can expect that from there, if there is a trend downwards, it will fall. And when it is 30 or below, it's like everything is oversold and nobody is there to buy, and that's the time, if the trend starts moving up, that's the time you can buy. So currently we have seen that the markets, because of this fall, has come at around 46. So this is one more thing to be observed. The fourth thing is the FII's outstanding contracts. So just like the F&O futures contract, if you think that the market is positive and then there is a lot of strength, then what happens? The FIIs keep buying and these figures become positive. So in last 2 weeks, from around 24,000 to 3.37 lakhs, and now it is 4.57 lakhs negative. So these many contracts are already sold, which means FIIs are also negative as far as the Indian market is concerned. And Nifty is something which has fallen from 16,548 to 16,201. Just to understand this a little more, in the second part of the bulletin, we also have given a details which is actually showing that how this is 95 and what is the detailed combinations of the market capitalization to GDP ratio. And this is another chart, which is there are various websites. I have just taken it from one of them. And if you see that this 13-day moving average and the 26-day moving average, there can be various other ways to find out. So whenever we see that the market falls below these two and remains there for some time, there is a negative thing which is actually happening, as we saw in varieties of cases, like on 23rd Jan, 17th May, 18th April. So this is something which is there. So currently, again, what we can see that the market has again dipped below these levels. And next week, we presume that the markets will be negative or neutral. This is the overall market situation, wherein we can see that the auto and the energy sectors in last 3 months are positive, and there are various others, FMCGs and PSU also. And on the other side, IT, reality, and metal, all this are negative sectors as a whole. So this is what is more important as far as this bulletin is concerned. Keep reading and keep enjoying.